Hey, traders from around the world! What's going on? It's your boy, Jerremy Newsome with RealLifeTrading.com. Hope you're doing fantastic. We got ourselves a Wednesday in the building, spelled with an I. Oh yeah, Wednesday. Some nice profitable day in the day trading room today. Interesting little market. This is the SPY, and I think most of you know by now I do in fact have did some analysis for this Condor. 285, 286. I forgot to put the date, but I did publish it in TradingView. So anyone who follows me on TradingView, you have access to that. Let me go and look at the exact date. I got that in there. The 1st of March. Okay, pretty good timing. So anyway, this is the little purple channel. This pink line is Mr. Squiggles. And I'm not saying this is going to happen for sure, but this is pretty much what I'm anticipating to potentially happen. Why am I saying that? Well, it happened once, and therefore it could happen again. So we trade down to the 100. We bounce. This is definitely a choppy market. We have made higher highs relatively, so that's a big takeaway. We're still making lower highs, but they're not insanely strong. So we're going to figure out which lower high is going to be the big one. But regardless, if we draw something like this and something like this, you can see that consolidation, and that's healthy. So option traders are going to have an absolute blast over the next few months, more than likely. Covered calls, iron condors, just neutral type of strategies, allowing the market to chop around. And again, long-term traders will have fun. Swing traders, you're probably going to get stopped out of a lot of things. So again, I'm slowly peeling back on my swing trades and have increased my option trades dramatically, and increasing the speed at which I get in and get out of trades, as well as just take advantage of some nice day trade moves. For example, this US steel, phenomenal bearish gap action. Nice gap right there on US steel. I mean, again, that did stop me out of a bullish position, which it's really not that bad because this was...
I'm a classic gap. Look at me, no candles on the screen, I'm a classic gap.
Money. The reason I like that one so much is because it was just this little support right here, of which it should have bounced off of, right? We consolidated, bounced a few times, had a really good breakout right there, and it did retest down to the 20. So here's the 20 exponential on US steel, here's the exponential moving averages right there. And it just bounced off the 20, nice lower shadow. So the fact that yesterday we gapped down below there, open below, definitely stopping out some short traders, including myself. And that's what's causing this sell-off, is you have some people trapped. Now on a monthly chart, I still don't mind at all the breakout. It looks good. It looks like we're trying to break out of resistance, but we are going to be pulling back a little bit, probably to the 34, 35 region on US steel, and that's where I'll be looking at buying a dip or some kind of put sale, pretty close to where this 100 simple moving average is. So on a day trade today, this was the official call out in the room, and very similar to yesterday, right? Our job is to find patterns for you traders and help you exploit them. So the stock traded down, traded up, a little bit of a double top, support right there, and then broke lower. Today, traded down, traded up, create a little bit of a double top, and then broke lower. Exact same pattern from right here. My buddy Brad Reed just crushed that one, and just a really good trade overall. The one that I played was Signet Jewelers, SIG, and Signet. Here's the daily chart, and just a good gap. Again, very pretty. I'm all about that gap.
I'm all about that gap, no candle. I'm all about that gap, gap.
I could do this all day, folks. Really solid support that it broke below. Right, here's your support level. Volatile stock on earnings, SIG is. You can see in previous earnings, I mean, this thing when it gaps, that gap caused it to move. This gap moved a lot. This gap moved a lot. This gap moved a lot. So, I mean, this is a really fun stock to trade on earnings. And anyway, it was just a retest gap, black candle gapping down. Here's the 5-minute, and as I mentioned in all the videos, here's the S-curve right there. And obviously, I would have loved to have said, hey guys, we just all went short below this doji spinning top candle right here. That would have been fantastic, right? 100 Rs or something, but wasn't that way. Entry just right below the low of that day, and stop initially was just right up there. So that was the trade. Good for about an R and some change. And hey, an R a day will keep the bill collector at bay. So anyway, that's Signet Jewelers. Now let's go look at some swing trades, or just trades or stocks in general that you find folks requested. Remember, you can post this in the comment section below. There's the arrow right there. Post it down there. Subscribe to my channel. And I'm happy to look at whatever you guys want to look at. So gold, I wonder where the gold's at. Show me the gold. Ticker symbol GLD, very sideways right now. Here's what's interesting about gold. Long-term moving average, you got the 100 simple. It's acting as a resistance, that blue line. We are making higher lows. We did theoretically or potentially break out of some kind of weird triangle-esque pattern on gold. But what is holding true is this trend line right here from way back when. So if I kind of zoom out on gold, here's that kind of trend. And we're just going to slowly grind higher. What do I actually think gold's going to do? Probably drop one more time and then from there bounce. And just slowly, ever so quietly squeak higher. Not exciting, gold isn't, but again, longer term, I think everyone sees it as a pretty reliable investment. Short term, I don't have any other trade. I don't have any trade on this one other than you could probably be keeping an eye out for an iron condor. OIH, also requested, and OIH. This is an oil vector ETF. So OIH down pretty solidly. As you can see, this is a monthly chart. Now granted, there is some support down here, right about there. And if this thing is going to bounce, this is generally the area that you'd be keeping an eye on it to bounce. I thought 2018 would be a little bit more bullish for oil, but I've been surprised, at least up to date. So right now, OIH is trading very sideways. For me personally, if I was looking at taking this trade, I would want a bullish close above that moving average and above all those bearish wicks and bearish candles and that big bearish volume. So a close above 2564 on that particular trade, I'd be at least more bullish than bearish. Here's Comcast, ticker symbol CMCSA, down 1%. I would like to see them go to 0. It's Comcast. I don't think anyone actually likes this company, but it did have a good bearish gap action right there. White candle, gap down, people were trapped, stock trade down, traded up, and it's kind of rolling over a little bit. There is some support here on Comcast, and that's really about it. Weekly chart, now again, mentioning that support, the 100 simple is a really, really strong support. Ironically enough, this is a stock that I have certainly missed out on the move. Here's the monthly chart, and Comcast has just been storming the castle since 2012. I've just missed all of this. Now, could Comcast become a double top? Possibly. Is it going to? More than likely not. We'll trade down to 31 and probably start seeing some bouncing. But eventually, I mean, this looks like a 1-2, some kind of wave 3, some kind of correction, and probably a wave 5 eventually on Comcast. Bullish to neutral stock. It's already made its strong moves. Buy it as low as you can, sell it as high as you can. I don't have any position on Comcast myself. Here's Johnson & Johnson. So Johnson & Johnson trading sideways. This is a monthly chart. Here's the weekly, and here's the daily. Looked really good yesterday. Had a solid little move, nice gap, and just traded right to the 200 simple moving average. Robert Falco has a share or two, and therefore he sold a covered call. That's sarcasm. He has to have at least 100 shares to do a covered call. So anyway, Johnson & Johnson, 138 for him expiring next Friday, will expire worthless. And Johnson & Johnson, some kind of channel. A little bit of resistance up here, some support down here. So if the market / some stocks rotate a little bit lower, let's look at finding a location where we can buy them as low as possible. That would make sense, at least to me, on Johnson & Johnson down here. And I'd be keeping an eye out for a dip around 126. And again, if it gets there, take advantage of that move. Here is GSVC Capital. And this is the daily chart. So I'm just going to look at the weekly because I haven't looked at this stock before. And not super expensive. It looks like it's running a little bit with volume. And it's not an old stock, been around since 2011. Not very pretty support and resistances though. You have one support resistance right about here. That one's looking pretty good. And you have one right about there. And that's really based off of this pivot right there. A little bit of support there, support there, support there. That's from the gap action and a little bit of a resistance. So as I kind of see it on this particular stock, you got kind of a wave as a 1, 2, 1, 2, 3. So this is a 1, 2, 3, And this is probably where we start pulling back a little bit on GSCV. Now, we don't have to, of course, but it would make sense. The trade has already moved up pretty well. I mean, you got this double bottom. The move happened in February. There's your close above the neckline. There's the retest on the 27th. I'll draw it for you just in case you can't see it. Cute double bottom right there. Neckline, close above the neckline, retest of the neckline, and just a good little pop. So from here, I would say look to, if it does pull back lower, find a dip that you want to buy and look to buy that. Here's the exponential moving averages, and I'd probably try it off the 20, which is at 814, or 744, which is the 50, or snag a little bit of a gainage at both, right? Half an R of risk here, and then half an R of risk there, and then have a stop down here. So just in case it does get to one and run, you're not missing the move entirely. So that is GSVC. And last but not least, LRCX. That was also requested. Lamb Research. Here's the daily chart. And here's the weekly chart. And bottom line, huge, powerful, insanely fierce move on Lamb Research and most companies in this sector. So what I'm looking for at this point, I do like the pullback possibility. I think it's just going to pull back possibly a little bit farther. Market's still open for another 11 minutes, but here's the resistance. And again, it looks like on a very small time frame, a 1, 2, 3, 4, 5. And that caused the correction right here. And then you got a 1, 2, 3. And inside that 2, I think this is probably some kind of pullback. Yeah. So a pullback into this about 211 area would be where I personally would look to buy the dip. The good news though on Lamb Research is this is a pretty interesting kind of a high wave candle. So if it pauses here for another day or two and trades sideways and then pops higher, should be really good on Lamb Research. Anyway, those are the stocks that I had requested. Remember, you can email me any requests that you have, or post them in the comment section below. Follow me on Twitter. There's all my social media stuff. Ladies and gentlemen, our mission at Real Life Trading is to enrich lives. Thank you for being a part of Real Life Trading. Thank you for helping make each month spectacular. March, Kids Month, halfway through. Got plenty of other cool stuff coming down the pike. Keep your eyes open for that. And until next time, love life, and trade. Bye.